You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports. Even poking fun at the rest of the media, this is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take out your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any more finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. What are we celebrating today? Well, it's National Mahjong Day. I know my mom used to play Mahjong. My mother-in-law plays Mahjong, so I get that one. National Girlfriends Day. Yeah, we better stay away from that one, Josh. We'll get in some serious trouble if we go celebrating National Girlfriends Day. I get in trouble now because sometimes I introduce my wife as my ex-girlfriends. I don't know if that's supposed to do that or not, but that's a whole different story. But having beaten anorexia, National Raspberry Cream Pie Day. That one looks good. Although there's not a huge amount of pies that I don't think look good, but National Raspberry Cream Pie Day. Okay, well, we can go along with that one. Let's see what the markets are doing today. The Dow Jones Industrial Average up 67, the S&P 500 up 4.39, NASDAQ up 62.89. Oil is down $5.31 per barrel. We like to see that, but is it sustainable? That's the question. Is it sustainable? So first off, let's take a look and see. We've got California gasoline, $5.60 a gallon on average. I paid $5.50 for premium over the weekend, so I was pretty happy that that's down quite a bit. Josh, you've still got us beat. $5.08 in Nevada. Jody's at $4.50 a gallon. And Lori, our tremendous underwriter in Louisiana, $3.82 a gallon. Love to see $3.82 a gallon. But the question becomes, what does all of this mean? And is it sustainable? That's the bigger issue. Is it sustainable? So we look at a lot of numbers. I get a lot of reports every day. But I'm looking right now at the futures market for oil. But actually, the futures market on oil shows basically what oil is being stored at, what the refineries are saying. Okay, well, I'm looking for oil for November of 2022. And they're saying they'll pay $91 a barrel. They're looking at January of 2023, 88. Then they're looking at April of 2023, 86. Now, if you didn't understand these markets, you'd say that looks good because the oil prices are going down. But we have to understand supply and demand. So what this is telling somebody that understands these things is there's no supply of this. There's no supply of this oil, but people want it. So maybe then this is for storage. So when there's no supply, when there's nothing, when they don't have anything in storage, they're looking to say, okay, I'll pay whatever I can. I'll pay this cheap. I'm going down in price here because I need more. I can use more. I can fill up my reserves. If they had tons, they don't want to store more. They put the prices up higher to say, I don't want any, but if I have to take it, here's what you're going to pay me to get it. That makes sense. So in this scenario, low is bad, high is good. Low means on the current world market, when we get to those dates, being that there's no supply and the demand is still there, that the prices are going to continue to go higher. So we can expect a little higher prices down the road on oil prices. Just throwing that out there, not to give you good news or bad news. It's the news. Speaking of the news, we've got more of it. There's more than we can handle right now, but I will share with you, for those of you that are still real excited about your 2020 elections, think about this. We do a little math for me. We're right around 9% inflation right now. Now, if you look at the month of July, we just finished the month of July. Obviously, we're on August 1st if you're listening to us today as I record in the morning, or on the ABC News and Talk AM 1490 audio or video feeds this afternoon. If you're listening to us same day we record, August 1st. So for the month of July every month is the equivalent of 8.3% of the year. Just do the math. You take 100, you divide it by 12 months in the year. Every month is 8.3% of the year. So Biden inflation at over 9% means the entire month was just lost to inflation. You can't buy anything extra based on the entire month's income from the month of July. Think about that one as you go to the election polls in the month of November to see, are you going to continue to vote for the same people that got you this lovely inflation? Or here in California, this gas tax? I saw a message earlier this weekend that one of our listeners sent me, and I don't have the entire message in front of me, but it basically said to register her car in Tennessee, $26.50 to register the car in Tennessee. Same car in California, $466. I just registered my car. It was about $460 as well. So these are who we're voting for. We've got another increase in taxes on the horizon. We know that one. Yet we're going to take $50 billion and give it away because the governor's got some idea that he's stronger than the entire planet and he can influence the weather. Now, I'm all for being a good steward of the planet. Pick up your trash, recycle what you can as much as you can, almost everything you should be able to. But I don't think mere mortals have control over whether it's going to rain or not rain. We're in Southern California. They're expecting monsoon weather here in Southern California. Maybe if I spend an extra $50 billion, we won't have a monsoon today. Does that make sense to anybody? I just throw that out there. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, why are people moving? We'll talk about it. Potential impacts on credit scores after student debt forgiveness. C.A.L.M. We're going to talk about C.A.L.M. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily Home and Finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule an appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. The S&P 500 now down 4.93. We're watching it closely. Are we seeing a reversal? We're going to keep an eye on that. The 10-year Treasury, 2.616. We've got a very strong level of support at 2.57. We've been dropping significantly over the last few weeks. Strong level of support at 2.579 roughly. So we're going to watch that one. Mortgage-backed securities up 13 basis points. That means interest rates are down a little bit, continuing that downward trend. If you bought a home in the last couple of months, maybe you want to give us a call at 800-306-1990 and see if we can save you some money on that more and restructure that loan before rates go back up. OBMMI provides the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgages. Friday's numbers, 30-year conforming loan locked at 5.302. The 15-year at 4.472. The jumbos, 5.024. Best loan on the market, the VA loan, 4.998. FHA, 5.269. And we will share with you, and I don't have my chart from Friday, although I bet Josh can pull it up quick enough, is Friday's chart of Thursday's chart of OBMMI. Because we always like to give you this as a reference so you have an idea of what's going on. Freddie Mac came out on Thursday and said that rates were at 5.30 and you had to pay 0.8 of a point to get it. That was the Thursday number. Well, if you look at Thursday's OBMMI numbers, do you think they're the exact same as what the Freddie Mac came out with? Thanks, Josh. So he just put up Thursday's numbers. Well, conforming loans, 5.424. So Freddie Mac says 5.3, and OBMMI actually locked at 5.424, more current, more accurate data. So be aware that just because that's what you hear on the news, it's not always correct. And let's take a look and see why the markets are doing what they're doing. So obviously the biggest thing is still the fact that we've got significant amounts of inflation going on. So the Federal Reserve, they're part of our problem. We know that. We've talked about it for the longest time. The Fed wanted to see higher inflation. Be careful what you wish for. The most recent reading of the CPI inflation showed inflation at 9.1%. I just told you that in the last segment, 9.1%. Fed has been hiking rates, and the Fed funds rate now stands between a range of 2.25 to 2.5. Many of the markets are now thinking the Fed may begin to pause or reduce their pace. But we heard some comments from a few Fed members this morning that are contrary. The Minneapolis Fed president, Neil Kashkari, he's done a horrible job, came out and said the Fed will continue to fight inflation even if we are headed into a recession. It's interesting to see his shift. Last year, he warned the Fed to not react to inflationary pressure and hike rates because inflation would be temporary.
You know better than that.
Yeah, thanks, Mr. Kashkari. You really know a lot of what you're talking about. It's interesting to see, again, his shift there. He also said 3 months ago he was expecting inflation to ease. Well, we all do. Is it going to be this year, though, Mr. Kashkari? I just wonder about that. New York Fed President Bill Dudley came out and said that thinking the Fed would not tighten much further is wishful thinking, is both unfounded and counterproductive. He believes the Fed will focus on inflation and not recession, and that they will need to tighten much further. The most lagging of economic indicators, the unemployment rate, has now become, again, the most important monthly data point along with CPI, because it will be that rather than the GDP that will more influence how much tightening the Fed has left in them. We're going to see that the unemployment numbers will come out this Friday. Something else to keep an eye on that can influence inflation. I told you about that in the last segment. Oil prices. So we're seeing that the futures are giving us an indication that oil may be going back to 120 or 130 a barrel. That's not exciting news, but it is the news. Again, we just watch what it's doing there. So markets are expecting a 250,000 jobs created. Remember last month, the household survey, now we had the BLS survey created to about 300,000. The household survey lost 300,000. So it'll be interesting to see which way we go this time. And we are on some important technical analysis numbers. I'm not going to get into that with you right now. Just know that our team watches the technicals. And when there's not a lot of news of the day, it's the technicals that will tell you what's going on. That'll lead the market. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. I'm going to give you a little data that I actually share with the real estate community. I do a meeting with the real estate community every Friday morning, and we're constantly sharing information with the real estate community. We're sharing what's going on in the world so they can come out and talk to their clients. Maybe that's even you, about what's going on. And one of the things that I want to share with you that we talked about this last week, and it's something that our friend Diana Olick, once again, generally getting the real estate market wrong. She shared this on a story on CNBC earlier today, talking about housing and the fact that housing is falling apart, basically, is what she had to say. Her commentary is that the appreciation is not there anymore. That's correct. It went from 19% appreciation to 17%. Diana, get a clue. Still hotter than it should be. She's talking about the amount of unsold homes on the market. Okay, yes, they have gone up. 525,550 unsold single-family residents on the market nationwide, 30% more than last year this week. 51% of them are under contract. Think about that. So out of an entire country, there's only 525,000 homes on the market, and over half of them are under contract, which means less than half of them are available for sale. And we're still 40% less than pre-pandemic numbers. 40% less. So, Ms. Olick, where's all the real estate? Where's all the properties that are on the market that you're telling everybody that are declining, that the properties are on the market longer? Yes, maybe they are. Now, we are seeing also one of the true statements that's out there is the amount of properties taking price reductions. 34.8% of the properties on the market have taken a price reduction. Well, normal is about 33%. 2018, we were at 37.2%. So, yeah, we are seeing price reductions. Those are the people that don't understand the payment assistance program that our team offers at Geneva Financial. If you were to understand the payment assistance program, you'd understand that as a seller, you don't need to take a price reduction. As a buyer, you'd rather use that money some other way because it makes you more money, not because you're a nice person. I'm not saying it just because you're a nice person. Maybe you are, maybe you're not. But I'm just all about the numbers. It makes you more money. So why wouldn't you want to do the things? I shared if you go to Ron Siegel Radio on Facebook, go to the Ron Siegel Radio on Facebook. I've got a pinned post. So that means it'll be the first post you see on there. I took a property from John Perez and demonstrated how with the payment assistance program, by offering more than the list price, the buyer saves, I think the number is $142,000. $142,000 through payment assistance. Now, do you think that seller is going to come down on a $700,000 property 20%? I don't think so. but you still come out way ahead. And oh yeah, if the property doesn't appraise, problem solved. We've got that in the demonstration there as well. Go to Ron Siegel Radio on Facebook. It's the very first pinned post, and you can actually see the demonstration of it. And I go walk you through it. I do a video on there. Not that you want to see my face, but I want to show you the numbers of exactly how you do this. Now, when you do it, you've got to bring our team in early to this scenario because, as I mentioned in the video, there are tricks and traps, right? If you don't do it the right way, the strategy will trigger high-priced and predatory lending limitations and compliance issues. We don't want you to have that. So bring the team in early so they can show you how to do this so you don't have those high-priced and predatory lending issues come up. And those only come up at the end of the process, right? When you're right about to close, get your documentation, you get a call from the lender saying, we can't do this loan. And now you've already given up all of your contingencies. You've potentially lose your earnest money deposit and have to start over on another property. We don't want that to happen again. Our team at Geneva Financial understands these things. I've already had conversations with the underwriters, the bank. They all understand what we're doing. You don't have to worry about that. That's why I tell you that, you got to get good advice. It's crucial. Want you to have that. We give it away for free all the time. So the bottom line again, give us a call at 800-306-1990. We'll be able to make sure that you have the opportunity. I don't know if it's right for you to save that money, but it would certainly be wrong if you did not have the opportunity to do it. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we're going to talk a little bit about C.A.L.M. What is C.A.L.M? That is an acronym, obviously. We're talking about the acronym C.A.L.M, Credit and Liability Management. We're going to be doing some workshops on that in the days and weeks to come. C.A.L.M. We're going to also talk a little bit. I've got it. Where's my note on this one? What is escrow? Should you get an escrow waiver? We'll talk about that. We're going to also talk about why are people moving today? Potential impacts on credit scores after student loan or student debt forgiveness, all that and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, the real-time real estate segment today. Being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Let's see if I can find this story. I wanted to give this to you. Why are people moving today? That is the subject of the real-time real estate segment. Buying a home is a major life decision. That's true whether you're purchasing for the first time or selling your house to fuel a move. And if you're planning to buy a home, you might be hearing about today's shifting market and wondering what it means for you. While mortgage rates are higher than they were at the start of the year and home prices are rising, you shouldn't put your plans on hold based solely on market factors. Instead, it's necessary to consider why you want to move and how important those reasons are to you. Here are two the biggest personal motivators driving people to buy homes today. A need for more space. Moving.com looked at migration patterns to determine why people move to specific areas. One trend that emerged was the need for additional space, both indoors and outdoors. Outgrowing your home isn't new. If you're craving a large yard, more entertaining room, or just need more storage areas or bedrooms overall, having the physical space you need for your desired lifestyle may be reason enough to make a change. A desire to be closer to loved ones. Moving and storage company United Van Line surveys customers each year to get a better sense of why people move. The latest survey finds 32% of people move to be closer to loved ones. Another moving and storage company, Pods, also highlights this as a top motivator for why people move. They note an increase in flexible work options has helped many homeowners make a move closer to the people they care about most. A shifting of priorities has also affected why people are moving. Many companies have moved to permanent remote working policies, giving employees the option to move freely around the country, and people are taking advantage of the perk, unquote. If you can move to another location because of remote work, retirement, or for any other reason, you could leverage that flexibility to be closer to the most important people in your life. Being nearby for caregiving and being available to attend get-togethers and lifestyle milestones could be exactly what you're looking for. What does that mean for you? If you're thinking about moving, one of these reasons might be a top motivator for you. And while that's happening with mortgage rates while what's happening with mortgage rates and home prices in the housing market today will likely play a role in your decision, it's equally important to make sure your home meets your needs. Like Charlie Bilello, founder and CEO of Compound Capital Advisors, says, quote, "Your home is your castle and should confer benefits beyond just the numbers," unquote. Bottom line, there are many reasons why people decide to move, no matter what the reason may be. If your needs have changed, let's connect and discuss your options in today's housing market. And if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can I count on you to give them our number, 800-306-1990, 800-306-1990. That is the Real-Time Real Estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. A workshop for you. What is escrow, and should you get an escrow waiver? When you get a mortgage, you'll most likely set up an escrow account. Some lenders require you to have an escrow account with certain loan programs. An escrow account can make saving for your taxes and insurance more convenient because those payments are included in your monthly mortgage payment, making it easier to put aside the money that is paid annually for your taxes and insurance. The question is, what if you don't want to have an escrow account? Can you get an escrow waiver? That's what I'm going to chat about in today's workshop. Most lenders require you to have escrow accounts, especially if you make a low down payment or have little equity in your home. But if you put a large down payment, it's sometimes possible to get a mortgage without an escrow account or to have an existing escrow account removed from your loan. To do this, you'll need to qualify for an escrow waiver. What is an escrow waiver? Lenders utilize escrow accounts to ensure that your property taxes, homeowners insurance, and if applicable, other types of insurance are paid. If you have an escrow account, your annual insurance premium and property tax bill will be spread out across 12 equal payments included in your monthly mortgage payment, in addition to any principal and interest that you pay on the mortgage itself. Your lender will take this part of your payment and put it into an escrow account to save for when these bills come due, at which point they'll pay them out of the escrow account on your behalf. Generally, this setup is beneficial to both you and the lender. Escrow accounts protect the lender by ensuring that your taxes and insurance are paid. The benefit to you is the peace of mind knowing that those payments are set aside so you don't have to worry about making these payments in one lump sum. However, if you prefer to handle these payments on your own, you can see if you can get an escrow waiver. While lenders typically require borrowers to have an escrow account, an escrow waiver renounces this requirement. How do escrow waivers work? If you're granted an escrow waiver, instead of having your taxes and insurance included as part of your monthly mortgage payment, you'd be responsible for paying each of the bills in one lump sum as they become due. Your lender will not make these payments on your behalf, and instead of paying a little bit of your total amount due each month, you'll owe the full amount all at once. This can be useful or risky. Depending on how good you are at planning ahead, you might prefer to hold on to the money yourself until it's due so that you can keep it in an interest-earning account. However, if you fail to save money ahead of time, you might be in for a big shock to your wallet when it comes time to pay. Your escrow waiver is contingent on you continuing to pay these bills. If at any point you become delinquent or your taxes or insurance, your lender will most likely revoke the waiver and require you to pay into an escrow account as part of your monthly mortgage payment for the life of the loan. What are the requirements for an escrow waiver? Whether or not you qualify for an escrow waiver will depend on many factors, including your loan to value, LTV, the type of loan you have, the type of property you're in, the lender's rules regarding escrow waivers, your state's laws, and the details of your individual loan. If you're able to get an escrow waiver, you may need to pay an escrow waiver fee, which is equal to a small percentage of your loan amount. No free lunch. Whether you're eligible for an escrow waiver will depend on a variety of factors. Check with your lender to find out their escrow requirements. Your state may also have laws dictating how and when escrow waivers can be granted, so you may be subject to additional requirements. Flexibility and control. You may be the type of person who would rather save the money you're paying into your escrow account and place it in your own interest-earning account where it can accrue cash until you have to pay your bills. If you prefer to be in control of your property tax and insurance payments, or if you have a fluctuating income and need the flexibility, it might make sense for you to seek an escrow waiver. What are the cons of an escrow waiver? If you want to forego an escrow account, you need to be good at saving your money. You also need to be aware of what you need to set aside each month so that you are prepared. When it's included in your monthly mortgage payment, that savings happens automatically. Having an escrow account can be really convenient. All you have to do is make your full mortgage payment each month, and your lender takes care of putting the necessary funds into escrow and then paying out of that account when your bills come due. Without an escrow account, you need to take care of all this yourself, including keeping track of when your payments are due. The bottom line is that an escrow waiver puts you in control of making the payments for your tax and insurance. Before you ask your lender about an escrow waiver, be sure you're able to handle budgeting ahead of time for tax insurance costs on your own. Foregoing an escrow account can be beneficial for the flexibility it provides, but can also be a risky choice if you don't plan ahead. Be sure to weigh all the pros and cons and discuss with your lender whether you qualify. Again, if you have any questions about this, give us a call at 800-306-1990, 800-306-1990. And if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can I count on you to introduce them to us? So I've been talking a little bit about C.A.L.M. It's something we're going to be starting coming up. We probably won't do it on the radio programs. We're probably going to do this aside from radio and set up some seminars, might be even weekly seminars, webinars for cash and liability management. And one of the things that I've come across in the last several years of talking to all of our listeners, or many of our listeners over time, is the fact that we're not getting a whole lot of education in our schools about cash management, about liability management, about how to deal with our debt. So we have a 10-module session that we've already got put together. We just have to figure out when we're going to be doing it. What is money? Your money story. Managing cash flow, 3 buckets. Key money dynamics. Debt and borrowing. Understanding credit. Clarifying taxes. IRA, 401k, qualified savings. Inflation considerations. Putting it all together with the PIN-FIN system. So those are the modules that we've already got put together. Every module is probably about a half hour. So we'll be looking at all of those to go over those with you. If you want more information on it, be sure to send us an email, rj@ronsiegelradio.com, rj@ronsiegelradio.com. That way, Josh can make sure and get you on the mailing list for when we start this series on C.A.L.M, cash and liability management. So that'll be coming up. Hopefully, we'll get it started maybe the end of this month, beginning of probably beginning of September. I'm old, so beginning of September is when we used to go back to school. I think it's earlier than that now. So we'll probably start that based on my old age issues early in September. So if you want more information on it, be sure to get an email over to Josh, RJ at ronsiegelradio.com, RJ at ronsiegelradio.com. You can also text him at 800-306-1990, 800-306-1990. When we come back, we've still got a long way to go. Potential impacts on credit scores after student debt forgiveness. And I think we had something about a big old, let me see where it is here. Is a super conforming a better loan option? So we'll go over that one as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily Home and Finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule an appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Borrow Smart segment today being brought to you by the National Institute on Financial Education. Borrow Smart, brought to you by National Institute of Financial Education. Potential impacts on credit scores after student debt forgiveness. The U.S. Department of Education recently announced that it will discharge the federal student loans of over 550,000 individuals who borrowed to attend any campus owned or operated by Corinthian Colleges, Inc. To date, the department has now approved $25 billion in loan forgiveness for 1.3 million borrowers. Now, that seems kind of interesting to me. To date, the department has approved $25 billion in loan forgiveness for 1.3 million borrowers, and there were 550,000 individuals who borrowed. So that's kind of a fascinating. How do you give only the government would give out money to 1.3 million borrowers when there was 550,000 involved? But that's a whole different story. So what does it mean for your credit score if your student loan debt is discharged and is now being reported with zero balance? It may result in the score going up, down, or no change. Well, really, is that
Surprise, surprise, surprise.
Up, down, or no change? The exact impact of student loan debt forgiveness on a consumer's credit score will depend on the specifics of the particular discharge proposal, as well as the consumer's individual credit report information, including the extent of their activity on installment loans. An installment loan is a type of loan where you borrow a set amount of money all at one time, then you repay the loan over a fixed number of payments called installments. Student loans are usually reported as installment-type loans. A FICO score is designed to be predictive of consumers' credit risk. Data shows that consumers who have active installment loans in good standing are more likely to repay their credit obligations than consumers with no active installment loans. This is reflected in a person's FICO scores. FICO scores weigh the amounts paid down and balances of mortgage and non-mortgage installment loans, such as student auto loans, against the original loan amounts. In general, when an installment loan is first obtained, the balance is high. As the loan is paid down and the balance decreases, there may be positive impact on the score. However, analysis of credit data shows that having a low installment loan balance to loan amount ratio is even less risky than having no active installment loans at all. As a result, if the only active installment loan being reported is a student loan, paying off the remaining balance on that student loan or having the balance discharged can result in a decrease in score. While no longer having an active installment loan is in good standing on a credit report, does remove a data point demonstrating active, regular, on-time payments, causing some consumers' FICO scores to see a temporary dip. It is certainly still possible for such consumers to retain high FICO scores. In addition, many of those people will see their scores rebound over time as long as they continue to demonstrate positive credit behaviors, such as on-time payments and a manageable level of overall debt. As I share with you all the time, I think you need to be watching your FICO score. The place I go, the only one I look at my FICO scores on, myfico.com. I don't do it because they pay me. I do it because that's the best source. I actually have to pay for it, which is fine. I pay to get my FICO scores there. I watch mine and my wife's, want to see what they're doing. And I want to know if there's any kind of a hiccup in there, if there's something that's inaccurate or fraudulent. I get to know it because they send me a text message all the time when there's changes on my score. Now, for your benefit, I get a lot of changes because I want to see on a real-time basis what my balance is going up does, what my balance is going down does to the scores, all these different things that I can influence, because then I can share that information with you. That's the Borrow Smart segment, brought to you by the National Institute of Financial Education. Again, if you have questions about your credit scores, want to have a credit score review, give us a call, 800-306-1990, 800-306-1990. A workshop for you. Is a super conforming loan a better option than a jumbo loan? If you're looking to buy in an area where home prices are a bit higher, you might need a slightly bigger mortgage loan to make your homeownership dreams come true. There are jumbo loans, but these often come with stricter guidelines and a higher down payment. Fortunately, there are what are called super conforming or high balance loans that allow you to access higher loan limits in high cost areas. As you know, my team, the Ron Siegel Lending team at Geneva Financial, Ron Siegel Radio, your home and mortgage connection, we like to share with you information you need about super conforming loans and how they work and how they compare with jumbo loans. So what are super conforming loans? It's easier to define super conforming loans if you start with the basics of what is a conforming mortgage. A conforming loan, also known as a conventional loan, is any loan that's backed by the government-sponsored enterprises, Fannie Mae or Freddie Mac. However, the key difference here is the loan limit itself. Superconforming loans, also referred to as high-cost or high-balance mortgages, are loans with higher loan limits specifically designed for areas where market demand has led to high home prices. Fannie Mae and Freddie Mac created these loan options in order to help in areas where home prices tend to be a bit higher. Hawaii, California, Alaska. How does the superconforming loan work? Superconforming loans differ from conforming loans in a couple of ways. The first is by creating superconforming loan limits. Nationwide, the standard loan limit for superconforming loans, for conforming loans, $647,200 as of 2022. The high cost areas, loan limits are set specifically for the county in the highest cost areas, as well as the states of Alaska and Hawaii. The top superconforming loan limit right here in Orange County, California, $970,800. These are the limits for single unit properties, homes with multiple units, higher limits. Superconforming loan rates, as with most types of home loans, mortgage rates may differ depending upon your lender. Typically, You'll choose either a fixed rate or an adjustable rate mortgage. The main difference being that a conforming fixed loan will have a set interest rate for the life of the loan, whereas an ARM can change with the market. Do you need a super conforming loan? You may be wondering if you need a super conforming or high balance loan. You'll know if you need a super conforming loan based on whether your area falls above standard conforming loan limits. If you're curious about the conforming loan limits in your area, you can check with us. We know what the current limits are, the high balance limits in every county in the sound of my voice. That's the entire United States. Jumbo loan versus super conforming loan. Jumbo loans are loans that fall above super conforming loan limits in some areas where the median falls above 150% of the national average home price. A jumbo mortgage may be your option for home ownership. There are a couple of key differences when it comes to jumbo loans versus super conforming loans. The first is that the down payments are usually higher for jumbo loans. For many lenders, you'll need to put more money down on a jumbo loan than you would on a super conforming loan. The second is that there are stricter qualification requirements for jumbo loans. Many lenders have options for jumbo loans that each may be a bit different. For example, some lenders, to buy a home with a jumbo loan, you need a credit score between 680 and 740, depending upon the loan amount. Additionally, you could need up to 12 months of reserves, although it can vary for super conforming loans. A median score of 620 and 2 months of reserves are a good general guideline. Bottom line is that super conforming loans offer those interested in living in high-cost area the opportunity for more affordable financing. Super conforming loans have a couple of key advantages over jumbo loans, namely lower down payment options and looser qualification requirements. If you're going to buy or refinance a home, it's one of several loan types to consider. Thanks for watching our workshop. And if you know someone looking to buy, sell, or borrow on real estate, can I count on you to give them our number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just a couple workshops for you, a little bit of information there if you're always looking to get you some of the great information that we have. Also, we've got a lot of workshops on our channels. One of them has to do with how to build your credit scores. We have it stored on our Vimeo channel. If you want information just on paying your credit cards properly, all you have to do is look at that one. And I think our link to that, rsrccpayment.com, rsrccpayment.com. I walk you through exactly how to pay your credit card bills the right way. Probably 95% of the people that I talk to pay their credit card bills incorrectly. And when I say incorrectly, they're paying them on time. The issue is they're not maximizing their FICO score with the way they're paying them. Go watch this short little workshop that I did. I think it's about 6 minutes, 7 minutes. rsrccpayment.com, rsrccpayment.com. And as always, I ask you, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime at 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Tried to swim against